Good afternoon, everyone. Keith here. Don't know if Tim's make it back. He had an appointment. He was hoping to be back in time. We'll get started here in a second, couple minutes. Just a quick question. Did you get an alert that this is being recorded?
Yes.
Okay, great. Thank you.
Hey, Keith,
Yes.
do you know, was there a report or something that came out around 2:30 that's causing this sell-off?
At 2 o'clock there was a beige book report, which was I guess statements from each of the 12 FOMC people and what they see on their future health of the economy. So that came out at 2 o'clock.
Well, this started around 2:30, I think.
Yeah, no, I'm not aware of anything at 2:30 that came out.
Okay.
Okay, we'll go ahead and get started here, everyone. Pretty much the market has been sort of in a reasonably narrow range since we signed off at 11, which was up here, and it came down a little bit, got in a messy middle here, then went back up a little bit, and then came down until about 2 o'clock here. That's when that report came out, so it was coming down a little bit there. And the yellow line, by the way, is yesterday's close. So we were slightly above that and going around on that. Came down, as Loretta said, pretty strong here at 2:30. Don't know what that was, and has come down here some more. And it's down quite a bit. Q's down $1.55 right now. The general markets, Dow's down 79, Nasdaq's down 75, S&P's down 20. So everything's down here since those reports came out. Anyway, so let's go back here a minute. The slight material I was going to present today is, let me move it over here and see where that's going to show up. There we go. Make sure that you're seeing that. Yeah, so I want to talk about, we talk about cent gains, that how much cent gains we have during the day. I think Tim was like plus 79 or 69 today, and mine was up $1.01. And they're not apples to apples because a lot of that depends on the price of the option itself. So I thought I'd put just a quick explanation in here. So the cent gains just tell part of the story, but the percentage gain, that's what's the real key to this, or real test for evaluating the success of a trade. And it's actually fairly simple if you're not familiar with it. So the gross percentage gain is simply the closing price minus the opening price and divided that by the opening price. It's as simple as that. An example for that, for one of them I did yesterday, I closed it for $7.14, opened it for $7 or $6.76, divided by 676, and that gives me well, I don't know why I have closing price here, but it's a 5.6% gain for a gross gain on that. Now the real actual one, so that's going to get you like 98% of the way there. The net percentage gain is really what you want. And each one of us is different depending on what our fees are for the trades. But you want to do the closing price minus the opening price. Then you subtract off the fees for that. Then you divided that by the opening price. That actually gives you the net percentage gain that you actually realize in your account. So so anyway, that's a real quick way for determining apples to apples in percentage gain for different trades. And I have from yesterday's trades, Tim's trades are on the left. He was doing today's actually expiration yesterday. And these were his opening prices down in the $3 kind of range. Closing prices here, and his dollar gain or cent gain here was here, which was a total of 94 cents yesterday. And you can see the percentage gain that he had on most of these. In my case, I was trading next Friday, that is a week from Friday's expiration on the 13th, and mine were about twice as expensive as what Tim was trading. And so I had like $6 to $7 opening and $7 closing. And so my gains were 38 cents and 41 cents, which you say, oh man, that's a lot better than what Tim was doing. But once you start looking at the gross gains on it, it's about 5.6 and 5.8%. So if you compare like the first line Tim had at 5.8%, his only had to go up 18 cents before he got that gain. Mine had to go up 41 cents to get that gain. And so in reality, Tim was getting 28%, I was getting 11%. Now, I only was able to do 2 trades because I was away at meetings the rest of the day. So I probably would have traded at least one more of these trades yesterday. I think I talked about it before I left at 10:30 yesterday. And so total gain for the day probably would have been up in the 20s or close to 20 with that one other trade that I would have done. But woulda, coulda, shoulda. I didn't want to be in a trade when I was going to be away from my computer. So I opted not to do that. But still, to get 11% in a day, I'm very happy with that for that. And that 11% is all based on the amount that you're trading. And I did not put a chart together on this. I think both yesterday and today I was trading 14 contracts, which is about $10,000 at risk per trade. And Tim, I think, trades about 100 contracts, so his is going to be up about what, $30,000 for his trades if he's trading 100 contracts. So anyway, that pays into it for the dollar amount gain. Tim talked about that this morning. So to calculate the total dollar gross gain, you take the gain, which is 38 cents here. You do that times 100, because that's 100 shares per contract. And then you multiply that, in my case, by 14, because I was doing 14 contracts. So that would have been $532 on this first line gain with a $10,000 roughly at risk. So that's how you do that. And that's really all I had to talk about here. Just want to make sure people understood And a lot of you have been around trading for a while and you understand this for gains and how all that is figured into it. But for those of you who are new to this, I thought I would throw this out there to help you out. So hopefully that makes sense. Let me see if we have any. So we did have a question. Hey, Keith, what is keeping this thing from going through the floor? Well, you got to have buyers and sellers, and so that's what's keeping that. We'll look at those charts here back in a second. Any other questions on the percentage stuff that you would have? You can unmute yourself or type it in the chat box, either way. Okay. All right, and this is recorded. I think I'll have to get it to Tim, but he'll put it out on the YouTube, on his YouTube site. Let me get that out of the way here. And let's get back and look at some charts. Yeah, see, the biggest thing is, generally speaking, the market can fall faster than it goes up. Just people get scared and they start selling things off. And if you get that fear factor of not wanting to hold it, just for that fact itself, it can go down a fair amount. But at some point in time, it's going to get down where particularly knowledgeable investors are saying, you know, this is really a bargain price now, so people start buying and it quits going down, and it will start going back up. So Randy, hopefully that helps your question on that from what's going to keep this from going down and down and down. And generally speaking, we haven't seen that really that happen much. You know, we've had a day or two of sell-offs, particularly a couple weeks ago on that Thursday and Friday when the Asian market was raising interest rates and people at 0% interest were investing in the market, so they had to sell and just to cover their loans, and that tended to make things go down quite a bit there. So, but it since has responded on that and bounced back. We also have had both yesterday, NVIDIA took it on the chin that it was released that the federal attorneys, I think, were looking into something that NVIDIA was doing unscrupulously with their AI software or something. And so they sold off almost 10% yesterday, and we're down some today. Give me a second. I'll tell you how much they're down today. Yeah. It's okay. NVIDIA. Oh, it's down 2% today. So still a bit of a sell off there, and that tends to be pulling the market because it's such a high percentage, particularly in the Nasdaq and also in the S&P 500. It's such a large portion of that. So anyway, so we've had a sell off here. We do have the MACD on the 5-minute going down. It looks like it's maybe starting to turn over here a little bit, the active line relative to the other line, the yellow line here, the marker line. You can see how flat the Heiken Aussie MACD is. I mean, good golly, that thing is. Let me blow this up here. Look how just flat that is since about 2 o'clock today. Yeah, 2 o'clock today. It's just even though it's been going down, it's it's such flat crossovers. I wouldn't trade that one way or another on that right now, even though it is coming down. There's no variation in the MACD on that, so I think that's a sucker's move for trying to get in on something like that. We've had a couple candles here, reasonable volume in the on the 1 minute chart up here, but most of them have been fairly low volume. Like we had one here that the market maker tried to get it to jump up and it came back. We had another one here where it tried to go down and it came back. It just was trading in a very narrow range here. Here's another one that tried to go down and it said, nope, not going to do that. So again, that's another thing, Randy, people are going to see, oh, it's trying to go down. No, this is bargain. I'm going to start buying into some of these. So that keeps it from going down also. We do have a couple green candles down here in the Heikin-Ashi chart in the bottom right, but they're not Heikin-Ashi candles. There's wicks on both sides, just uncertainty as to which way it's going to go. So I wouldn't do that. We did have, what, 1, 2, 3, 4 Heikin-Ashi candles when it was going down from about a little before 3 o'clock. Had just a couple here. So not any huge moves. Here at 2:30, though, we did have quite a few Heikin-Ashi candles in a row here. That 1, 2, 3, 4, 5, 6, 7 Heikin-Ashi candles in a row there. So that was a big sell-off. And when you get a number of Heikin-Ashi candles, again, wicks on just the bottom side if it's going down, or just wicks on the top side if it's going up, those are indications that there's a lot of momentum going down in that. And so those are good things to look for getting into a trade there. We do have the 5 minute, again, MACD starting to cross over a little bit here, flattened out. The longer term, and actually, let me bring this over here.
Keith, will you repeat that, what you said about the wicks? The last thing you said about the wicks?
About the Heikin-Ashi candles, if you get a bunch of those in a row, you really have some good momentum going down on this. Or if you have a bunch of Heikin-Ashi candles going up, those are definitely signs of strong momentum going up. In this case, coming down here, and you had 7 in a row here going down on this one.
Thank you.
Yep. And on this one, this is another set of charts that I have that Tim was asking me about a couple times this morning. The bottom left one is a Heikin-Ashi 15-minute chart, and the bottom right one is just a regular 30-minute chart. And you can see both cases, particularly the 15-minute Heikin-Ashi, that's momentum going down. And maybe it's starting to flatten a little bit, but not by much. And the 30-minute is certainly crossed over and is going down also. So that's and again, these are going to be slower changes than the 5 minute and the 1 minute Heikin-Ashi that we normally look at. But I tend to follow these, particularly for my longer term trades, as to what are we expecting to see on that. And we'll get into that probably at a later time, but right now those are things that I'm looking at for not only getting in longer term trades, but knowing when to get in even shorter term ones to catch the momentum, both going down and coming up. So found it very useful to do that. So. And so we are starting to get, we maybe got our, maybe the second Heikin-Ashi candle. This one, this last one had a little bit of a nub on the bottom. And the one before that, I can't tell, but maybe might have one. And the 5 minute, now it's starting to head back up. Where are we on the Qs? The Qs are down. Q is down $2.04 at the moment. Getting some pullback here on the 1 minute chart here. By the way, the blue line I have on here is yesterday's low. So we came down to yesterday's low. We started down below yesterday's low and had that gap play here at the beginning that was short-lived. But but the blue line is for yesterday's close. And then I have, where'd the other one go? Huh. I don't know where. Maybe I deleted that one. Let's see here. Maybe up, oh, it was up quite a ways. Yeah, this red line up here is yesterday's high. So anyway, I draw those on there so it brings them over and allows me to track where we are relative to yesterday's movement. And again, the yellow one is yesterday's close, the red one is yesterday's high, and the blue one is yesterday's low.
Is there any significance to know where you were relative to yesterday's low?
Yeah, let's take a look at that, because a lot of times you will get support at it. Like here, the yesterday's low. Let me blow this back up here again. Came right down to yesterday's low here, and then is bounced off of that and gone back up. We had a problem this morning with that gap play. It crossed over yesterday's low going high, but immediately came back, and it wasn't until the third candle that it shot up past that. We had a couple other ones that came down trying to get below yesterday's low, and it just didn't want to do that. So like the intermediate zones we have here, I think a lot of times it'll find resistance or support on yesterday's high and low, or even yesterday's close. Now, in this case, it followed yesterday's close all the way from like 11:30 till 12:15. So it was sort of bouncing around there for quite a bit, as well as from 1:45 to 2:30. It was just bouncing up and around yesterday's close there also on that. So just like the zones, it can act as a support or resistance on that, and like we see down here on yesterday's low. So yeah, it can have some indications on that. Certainly haven't been anywhere near yesterday's high, which started the day yesterday, on that. So nothing there on that right now. But yeah, I like looking at that. Plus, it's a visual indicator for when we have a gap play by drawing at least yesterday's high and low in there on that to understand that quickly and not have to always watch the numbers. Hopefully that makes sense there. Again, on the 5-minute, we are starting to turn up here a little bit, but you look at the 1 minute, it just hasn't moved much. Still not high volume. We had a high volume at 311, but most of them have been under 100,000, which we like to see as a good continuation move. Let's look back though when we had these. Well, let's look at the 230, where we had these 7 candles in a row. Let's see what volume we had on that. So even that at 230, we had pretty low volume till 235. Then we just had like 3 candles that were reasonable volume. Then not much else till just before 3 o'clock, waiting for me to come on and see what I was going to say. So anyway, so it wasn't a huge volume that moved that down, but definitely some Heikin-Ashi candles in a row there from right after, say, 12:32, or yeah, 2:32 down. Where are we volume-wise here? We are about 27 million underlying have traded today, which is fairly low for the whole day itself. You know, a really strong day, we have 20,000 or 20 million underlying traded by 10:30 in the morning, and here we are going on 3:30, and it's not much more than that. So it's been a fairly light day in trading today. Again, a lot of it may be waiting for the waiting for the August jobs numbers which will come out at 8:30 in the morning on Friday before the market opens. And that could, people may be just waiting for that. Even tomorrow, we should get, let me pull that up here. I got it here somewhere. Yeah, here it is. Nope, that's not it. There it is. Yeah, tomorrow morning before the market opens, we have Thursday, we have the ADP employment change numbers come out. We have continuing jobless claims come out. Those come out weekly. Initial jobless claims come out tomorrow. The 4-week average initial jobless claims come out tomorrow. And non-farm productivity numbers come out tomorrow. All these come out at 8:30 before the market opens. Unit labor costs come out tomorrow morning. Then we have a global composite PMI, producer manufacturing index numbers come out at 9:45. And then the ISM service numbers come out at 10 o'clock. So we could get a pop tomorrow, have all the August numbers for that come out. And so people are waiting for some of this stuff to come out. We do have a bond auction tomorrow also at 11:30. And then on Friday is the big one. We have the government's average hourly earnings, year-to-date, month-to-date numbers come out. Average weekly hours come out. Labor force participation rate comes out. Non-farm payrolls, that's the real big one that comes out. They're expecting a pretty big jump from the July numbers to come out. So all that comes out at 8:30 tomorrow on Friday morning before the market opens. And then we have the Fed person Williams will be speaking at 8:45 in the morning. And the Fed's Waller will be speaking at 11 on Friday. So those could move the markets on Friday. So anyway, number of things coming out on Friday. I think NVIDIA has spooked the market a little bit. That's what's been sort of leading the train for the sell-off here the last couple days. And that's it. Now we have the Heiken Aussie MACD is starting to flatten out a little bit, and it's still really low. It just hasn't been in a very big range here. So I wouldn't trade anything here on that right now. We did get a crossover in the 5-minute going up, but it's not a real strong move there. In fact, we had a Heiken Aussie candle here at 326. Just not much movement here this afternoon. And I'll let you know, I'm not going to do any trading going into the close. I'm not really expertise in that. I know Tim's done a lot of that work and trading going into the close, but I don't typically do that.
Yeah. And speaking of Tim.
Oh, hey there.
Hey, I'm back. Thank you.
You want me to stop sharing and you take over here?
I can if you're good.
Yep.
Okay. Well, thank you. I appreciate it, Keith. Thank you, guys. Had an appointment that kept me a little bit longer than I anticipated, but I'm back. I hope you enjoyed Keith's presentation. I'm sure it was wonderful. And I know we've got it recorded, so things are good.
Tim, Cliff had a question as to where I get the Fed announcements.
Yeah.
And actually, let me go ahead and share that again. I get it here on this fxstreet.com/economic-calendar. And then typically, I'll show you how it comes up. It normally comes up like this with all these countries and everything. And I go in the filter. I clear
I'm
them
not
all.
seeing that.
You're
Sorry,
not seeing,
Keith.
you're
No.
not seeing that?
No, we are not seeing it.
Huh.
I can see your picture.
Well, let me try it again here. Share screen. Oh, you know what? I always forget you have to hit one more thing.
There it is.
Okay, sorry about that. Thanks for letting me know. So anyway, this is the way it normally comes up. Come on down here. Well, there we go. Okay, so it gives all these other countries, it just a whole slew of them. I clear them all and just pick the US. Apply that filter. And then I normally go in and do this week and apply that. So you see the whole week in here. So that's where I get my data from. And actually, let me see if I can do this, see if I'm savvy enough to do this on the chat.
Name of the website again, Keith.
Yeah, give me 1 second here. How do I enter something? Oh, there it is. Okay. So I put it on the chat, the address for that.
Okay, thanks.
So we're getting a little bit of a push up here. Kind of looking in the past, I don't see much in the way of tradable stuff.
Yeah, the volume's been down pretty well. We only have 27 million underlying traded through the day.
Hmm.
So it's been fairly light. We did have a pullback around 2:30. I don't know what that was. The Fed's beige book came out at 2 o'clock,
Mm-hmm.
and that wasn't much of a sell-off, but starting at 2:30, it had a good strong run as sell-offs there.
Mm-hmm. Yeah, I see that.
So
Yeah.
needless to say, Tim, I have not done any trades here since 3 o'clock this afternoon. Actually, I haven't
Yeah.
done any since this morning.
Yeah, yeah. Yeah, looking back, doesn't look like there was a lot of tradable stuff since we hit the high of the day. Looks back at 12:39-ish. Oh no, it was much earlier than that. It was during our it's actually right after we got off of the morning session, hit its high of 464.46, and looks like we've been retreating since then.
Tim,
But
if you're sharing your screen, I'm not seeing it.
oh no, I'm not. You'll need to make me host again.
Oh, sorry about that. Yeah. Well, I'd be glad to do that.
Okay.
There you go.
All right. Why am I not? Should be able to take it back. Submit some people in the waiting room.
And halfway through the meal, Jimmy goes, I think I've eaten at this restaurant before. The last time.
Let's mute that. Mute that out. You gave me control.
I did. Yeah, I don't have control.
Yeah, here we go. Let me share my screen. Boom.
There
Boom.
we go.
Now you got it. Okay. Okay, and you covered all the chats in the chat room?
Yeah, there was one other one, I think, in there. Where was it?
Oh,
I think I can't got them all.
okay. All right, good. Good. Okay. Back on my
Oh,
screen.
there was one this morning from Gary. I don't know that we addressed at the time. He says you usually wait before taking a trade just before the pop at the top, right?
Uh-huh.
And I say that's usually right. Now, if we are in a trade, a lot of times we will stay in it through the pop. but based on the charts, but typically we like to be out before the top and then get back in a minute or two afterwards, depending on which direction it's going.
Right. Right. Exactly right. So it looks like price came right down to this minor zone a bit earlier, bounced off the minor zone. We've been climbing since that, getting close to VWAP and the second minor zone.
Where it came down to that minor zone too, Tim, it actually came down slightly below that,
Mhm.
down to yesterday's low and bounced hard off that and came back up.
Okay. So interesting market today. Really thought, well, this is very true of a lot of days. In the afternoon, we'll see reversals off of highs that we get about midday.
And I don't know if you were on, Tim, but we have a number of announcements coming out tomorrow morning before the market opens at 10 tomorrow. And then the big one at the jobs numbers from the Fed coming out on Friday morning before the market opens. So people may be just sort of sitting on the sidelines waiting to see what happens there.
Yeah. Yeah. So just kind of going sideways right now.
Tim, is there generally more action in the morning than there is at any other time in the day?
Yeah, it's really the first hour, hour and a half has the best volatility, followed by the last hour of the market. But we have just not seen that much volatility in the afternoons here lately. I'm not sure why, but that first hour is by far the best.
Thank you.
All right, getting the push down. Let me go over to the 461 on the put side. And it's reversing back up. Dude, what I'd like to see is I'd like to see price rise out above this this zone that's right above and get across a VWAP or break below the next zone, kind of right in the middle right now. As Keith pointed out, volume is pretty low, has been. Phew. Looks like most of the day. A little push up here. Pop back over to the call side of the 460. The put side pricing has come down nicely. Call side's come down too, but not quite as sharply as the put side has.
Tim, is the bottom of the candle always the open?
No, not always. On a bullish candle or green candle, yes, the bottom is the open. The way it goes is you've got open, high, low, and close. If you start on a red candle, that top of that red candle would be where it started.
Okay.
Now, wicks are generally stay ahead of the current price. That's just the market maker marking to market or marking price ahead of what current price is. And this red candle we're on, if the current price would rise above the open, it would turn green.
Hey, Tim, I'll be back.
Okay. And the wicks represent the high and low. And depending on whether it's a bearish or bullish candle is where the open is. Wow, getting a nice little push now. See if it breaks through here. Coming up to VWAP. This is a case of where, again, whether we break through and then pop up as it's kind of doing right now. So let's just go over that 461 on the call side here. Just see if it stays above this minor zone and above VWAP. Of course, keeping in mind that this could be a crazy Ivan as well. Yeah. Looks like that was a crazy Ivan. All right, see if we push through again. And stays through, pushing through VWAP. Now get through this minor zone. Not getting a lot of help from our MACD.
No, it's been so shallow crossovers
Yeah.
for most of the afternoon.
All right, I'm going to go to the 461 on the call side. If this can get off of this zone and rise, but having a horrible time doing it.
Yeah, pretty anemic volume.
Yeah, yeah. Just doesn't want to take off from there. You see this last minute, the bottom of that candle and the start of the current candle, you see the gap between the two? Now, there is literally no time between when one ends and the next one starts. It's instantaneous, but notice there's a gap there. It just shows you price acceleration. And that's one way, one gauge that we can use on momentum is when we start seeing these gaps show up, it's showing increased movement in price.
It just happened again on the upside, right?
Yep, it just happened again. And that's also shows you a little more volatility is coming into pricing. As we get nearer to the end of day, volatility starts to pick up as folks rebalance portfolios, and we have mark on close orders coming in. They have to be in by 3:50.
Tim, you mentioned rebalancing portfolios. That to me would imply some tax-driven situations. Is that an issue in day trading?
Well, only when you make a ton of money.
Gotcha. Yeah, right.
But I'm sure that, you know, there are folks trying to figure out how to lessen their tax burdens. But with day trading, we're, you know, tax wise, we've got a pretty simple setup. I mean, we get a P&L at the end of the year from Schwab, and you know, it tells the whole story. Wow. All right, let's see. I'm gonna go over the 461. Now we're starting to get some volume coming in.
Yeah.
Let's see how far to the next one. Boy, it starts to look like the morning price movement. All right. Let's see. How about the 462 on the call side? Stand by. Watch it come right back down. Yep. Oh, crazy Ivan action there. Comes back down, touches the zone, almost a VWAP. Yeah. Problem is, there's just no real direction to this.
Joseph, please. Mark Hughes with Tim the Trader. Rob.
Each time one of these little moves gets going, it gets beat back. Might have falling knives here. What time is it? 3:55. I'm not sure I want to get into a trade this late.
Why not?
I don't want to get stuck having to possibly carry something overnight.
Gotcha.
Great question, though. Because actually, the market actually closes at 4:15 on options. I mean, we can sell all the way up to, well, realistically about 4:05, 4:06 before the market just stops. Yeah, it's a doji. Look at that long wick on that doji.
That isn't what they call a shooting star, is it?
No, no, the wick could be on the top side for
Oh,
a shooting star.
okay.
All right. Well, guys, we're not going to get into a trade this late, so let's go ahead and call it a day on this. No trades this afternoon. Thank you, Keith, for starting out and doing the lesson this afternoon. We did end up today with 1, 2, 3, 4 trades for plus 61 from this morning. So good day. This stuff is just not good to be. It's just not good trading conditions right now. So there's no need to waste money, waste capital on it. So that's it, guys. Let's go ahead and wrap it up for today. And we'll see you tomorrow morning, Thursday, and we'll do it all again. So thank you for joining us this afternoon, and we'll see you in the morning. Bye for now, guys.
I'll give you a call in a second.
What's that?
I'll give you a call in a second.
Keith, I've got to get on a call. Can I call you in a little bit?
Yeah, that'd be fine.
Okay. All right. Bye-bye, guys.